Hello everyone, welcome back to a new video. This will be episode 2 and it's about cracks in correlation. So the topics will be sequential SMT, precision swing points, two-stage SMT, and the highest probability PSP sequences. So if you guys haven't watched the previous episode, go and watch that first because it will be much easier to understand the concepts I will be talking about today. First of all, let's go through what sequential SMT actually is, and it's just a filter for high probability SMTs, and it's based on time, right? So we can start from the monthly cycle sequential SMT, which is essentially where the monthly candlestick has hit some kind of relevant level, and we do know that if you want to capture the majority of the expansion in a higher time frame candle, we need to hit some kind of relevant level to then expand away from, and that can be liquidity pools, so relevant lows and relevant highs, or it can be higher time frame gaps. Now to profile the monthly candlesticks, we know that we can use the weekly chart, essentially viewing the monthly candlesticks in 4 quarters or 4 weeks, where a sequential SMT is just the SMT between 2 consecutive quarters or 2 consecutive weeks. And it doesn't matter what quarter it is. Essentially, all it has to be is 2 consecutive quarters. And to view or to confirm the sequential SMT, we use the 4-hour time frame, where you can get your confirmation either with a change in the state of delivery or a higher time frame gap. The weekly cycle sequential SMT is the same concept, right? We are profiling the weekly candle after we have hit some kind of relevant level, and then you're viewing it in the lens of the daily chart, and it's the same thing. It's where you have a sequential SMT between 2 consecutive days, and that is oftentimes the low or high of the week, or it could cap off the weekly range. And you can view this in the lens of an hourly change in state of delivery or a hourly displacement, then forming a gap where we can retrace into and then expand away. Now we have the daily cycle sequential SMT. So it's the same thing, right? You're viewing the daily candlesticks in 4 6-hour candles, so 4 quarters, right? Splitting up the day. And this is essentially just a sequential SMT between 2 consecutive 6-hour candles or 2 consecutive sessions, right? Because every candlestick here is just your 4 sessions, being Asia, London, New York AM, and New York PM. And this you're viewing in the lens of the 15-minute time frame, where you're waiting for 15-minute change instead of delivery, or some kind of displacement forming a gap where we can retrace into and then expand away. Now we have our session cycle sequential SMT, or what you can call a 90-minute sequential SMT. And this is where we profile a single session or a single 6-hour candle, where it's the same thing, right? We have hit some kind of relevant level, and then you're viewing the 6-hour candle or the session, right, in 4 quarters, being 90-minute candlesticks. So these are all 90-minute candles where you have a sequential SMT between 2 consecutive 90-minute candles. That will oftentimes be the low of the 6-hour candle. And this you can view in the lens of the 5-minute chart. Now, precision swing points. Precision swing points are when the market engages some kind of key level, right? And you have correlated assets making 2 different closes on a swing point, right? So you see this candle 2 right here, making the high of this swing formation. See how this is bearish? If you go on this asset right here, this made a bullish close. And this by itself is a cracking correlation. And I'll also show you guys how you can combine this with SMT, forming that two-stage SMT sequence. Now, two-stage SMT, you can see right here, the asset that made the bearish close on this swing formation creates a failure swing on candle 3 here, not taking out the candle 2, while this asset right here takes out candle 2 and forms that SMT. So this is a two-stage SMT. Essentially, you can anticipate this asset right here to not take out this high right here. So this is a very, very powerful reversal sequence. Now we have a different form of two-stage. Right here, we see that this asset here has taken out previous week's low, while this asset here has not taken out this previous week's low. If you guys paid attention to the first slide today, we know that that's a monthly cycle sequential SMT. But then to confirm this, what you can do is use a daily or a 4-hour PSP. So you see how after we have made this sequential SMT, this asset right here makes a bullish close on this swing formation, while this asset here makes a bearish close. So this is a two-stage now, and this low here has a sequential SMT, so there is no need for any of the assets to return back to this low. So what you saw in this slide right here doesn't need to happen, because this low here is governed by a sequential SMT, and this essentially just confirms this. So this is already a two-stage, so none of the assets needs to take out this low. Now the same thing applies for the weekly cycle. It's just different confirmation PSPs. So here this asset has taken out previous day's low, while these assets right here makes a failure swing, and we have formed a weekly cycle sequential SMT. And then if you get a 4-hour or 1-hour PSP, this will form a two-stage where you can look at the lower time frames and try to get an entry here, anticipating this low right here to not get returned back to, because this is a two-stage. Now we have our daily cycle sequential SMT, right, where one asset takes out the previous 6-hour low or the previous session's low, right, and we form a daily cycle sequential SMT. For this, you can use an hourly or 15-minute PSP to confirm it, and then you can look for a lower time frame entry signature and then catch this expansion higher. Now we have a different type of two-stage where you have a low to the left, so higher time frame sell side liquidity pool, where we make a SMT here. So this is your higher time frame SMT, right? And then later on we will make a lower time frame SMT. So this is a two-stage SMT. It doesn't need to happen at the same time. While in this example right here, we have a higher time frame SMT, and then immediately we get a lower time frame SMT. So you see right here, this low on this asset is not taken, and then this low right here is taken on this asset, but it's a failure swing right here. So essentially what you get is a higher time frame SMT followed by a lower time frame SMT right away. Then we have the highest probability PSP sequences and how you can combined sequential SMT, and high probability sequences. So right here we have a weekly PSP. So you see how this asset right here makes a bearish close on this swing formation, while this asset right here has a bullish close. So then you expect this asset right here to not take out this high, while this asset right here takes out that high. And why do I use a weekly time frame? Why is the weekly PSP important? Well, what do we know? 2 consecutive weeks. That's a monthly cycle sequential SMT. So when this SMT forms, this is a 2-stage, but it is also in line with quarterly theory. So it will form a sequential SMT. It's not any SMT. So that is why I use the weekly PSP. Now we have the daily PSP. Same concept, right? You have this asset here making a daily PSP. Right here, bearish close. This makes a bullish close. You expect this asset here to take out the previous day. What does that mean? It'll form a SMT between 2 consecutive days. That's a weekly cycle sequential SMT, which we know is oftentimes the lower high of the week. That is also why it's called the weekly cycle. It's based on weekly range logic. Now we have our daily cycle sequential SMT paired up with a 6-hour PSP. Why a 6-hour? Well, we know that 2 consecutive 6-hour candles will, if we have a SMT between them, will form a daily cycle sequential SMT. And then we have our 2 a.m. 4-hour PSP. It's the same concept as the 6-hour, and it's the same concept, but sometimes on the 6-hour it won't show, but on the 4-hour it will create this sequence. Something important to note is that you need to drop lower from the higher time frame than to the lower time frames, right? So this is another very, very high probability sequence to catch the daily range. And use these sequences. You don't have to trade the sequence. It can be used for narrative and bias, and also depending on what type of trader you wish to be. Now we have our 6 a.m. 4-hour PSP, where the 10 a.m. candle forms a SMT. While this isn't sequential, it is something that is still significant and very, very high probability, where the previous 6 o'clock 4-hour candle makes a PSP, as you can see right here, and then we form a SMT with the new 4-hour candle. Now we have our 90-minute PSP combined with a session cycle sequential SMT. So what you see here is we have a 90-minute PSP with this asset right here, and then we form a 90-minute sequential SMT. And then we have the same concept right here with our 8 o'clock hourly PSP, which will form our sequential SMT right here, being the 90-minute. I will show you guys an example of a trade I took on Tuesday where I shorted this day using the sequences or the concepts I've shown you guys in this video. So if we look at the previous day, what did Monday do? Monday took out Friday's high on this asset right here. But if we go on a correlated asset, you can see how Monday's candle left a failure swing. So we have a SMT between 2 consecutive days, which we know is a weekly cycle sequential SMT, which oftentimes can be the high or low of the week, or at least give you a bias for the next day. So now if I'm bearish coming into this day, I'm looking for the day to form its wick, and then trading the expansion move lower. So dropping into a 6-hour candle, we can see Asia right here leaving the previous day's low and then opening higher first. So all I'm viewing this as is manipulation to form the daily wick. And right here we have our Q3 open, or our New York AM session, right? This third 6-hour candle is our New York AM, this is our London, this is Asia, and then this is New York PM session. So profiling the daily candle into 4 6-hour candles. Here we can see a New York reversal of London highs, but what else can we see here? Notice how London here is a bullish close, right? This is a bullish close on this asset right here, and this asset takes out this high, right? But if we look, so if we look on a correlated asset, what do you see here? This asset right here has a bearish close and also puts in a failure swing. So what do we know about 2 consecutive 6-hour candles? This is our daily cycle sequential SMT. So now we have a 2-stage SMT forming the high of day, and it's also a daily cycle. We know that for the daily range, this is oftentimes the high or low of the day. So now I was very confident with this 2-stage that this is high of the day. Now dropping to a 15-minute. All we get a close below here, confirming that this is a reversal. And what I did was to take the first continuation entry, and I had my stop above right here, and then I shorted to these lows right here. So this is how I use these concepts in lifetime. So hope you guys enjoyed this video, and see you all in episode 3.